Welcome to Macro Money Talk, where we decode the complex financial signals shaping our world and your personal economic future today. The global economy is currently facing a massive convergence of challenges that threatens the stability of nations and billions of people. We are navigating through 5 core issues that are putting unprecedented pressure on financial systems, creating a volatile and uncertain environment. From the rising cost of daily living to the shifting geopolitical alliances, every aspect of our lives is being heavily impacted. Today, we will dissect these 5 critical storms: inflation, inequality, aging populations, massive global debt, and the fragmentation of world powers. Understanding these forces is no longer optional for investors or families. It is essential for survival in this new economic era. The decisions made by policymakers in these buildings ripple out to affect the price of bread and the value of savings. Let us dive straight into the first and most immediate problem that everyone feels every single time they open their wallet. The first major storm is the persistent inflation and the cost of living crisis that has gripped the entire world recently. This crisis traces its roots back to the pandemic, when governments printed trillions of dollars to keep their economies on life support. That massive injection of cash chased a limited supply of goods, triggering a price surge that we are still fighting today. Although inflation rates are technically coming down from their peaks, prices remain stuck at these new, painfully high record levels. Consumers are discovering that their money simply does not go as far as it used to, forcing a change in lifestyle. Families are now forced to make difficult choices between essential needs like healthy food, heating their homes, or paying for education. Energy costs have become a significant burden, acting like a tax that drains disposable income from every household across the globe. The sticky nature of inflation means that even if the rate falls, the prices we pay at the register stay high. This leads to social friction as workers demand higher wages to survive, which in turn can fuel further inflation in services. Savings that took years to build are being eroded rapidly just to cover basic monthly expenses and unforeseen medical emergencies. The dream of home ownership is slipping away for many as high prices and high interest rates create a double barrier to entry. Everyday luxuries like dining out or taking vacations are being cut from budgets as people prioritize survival over leisure and enjoyment. Real wages have not kept up with inflation in many sectors, meaning the average worker is effectively poorer than 3 years ago. Small businesses are also suffering as customers tighten their belts, leading to a cycle of economic slowdown in local communities. The balance of financial life has been disrupted, and restoring it will require time and potentially more economic pain for everyone. Central banks are walking a tightrope, trying to crush inflation without causing a deep recession that destroys millions of jobs. For the most vulnerable populations, this is not just an economic squeeze, it is a daily crisis of hunger and insecurity. Logistics and transportation costs remain volatile, adding another layer of unpredictability to the final price of goods on the shelf. As we move forward, the era of cheap money and cheap goods seems to be over, replaced by a new reality. This brings us directly to the second major issue, which is the widening chasm of global inequality and wealth disparity. Global inequality has accelerated at a terrifying pace since the pandemic began, creating two very different worlds on one planet. Since the year 2020, the richest 1% have captured nearly 2/3 of all new wealth created globally. This disparity is not just a statistical anomaly. It is visible in our cities and creates deep resentment in society. While corporations posted record profits during the crisis, average workers saw their purchasing power destroyed by inflation and stagnant wages. Such extreme inequality is historically a precursor to political instability, social unrest, and calls for radical changes in government systems. We are already seeing the cracks form as populations demand accountability and a fairer distribution of the economic pie worldwide. The housing market reflects this divide perfectly, with luxury properties booming, while affordable housing becomes practically extinct in major cities. Social mobility is stalling, meaning that being born poor increasingly dictates that one will remain poor for their entire life. The divide extends to education, creating a generational gap where the wealthy secure their future, while others fall further behind. Technological advancements and automation are rewarding capital owners while threatening the jobs and incomes of the working class globally. Tax systems in many nations struggle to capture wealth accumulation, leaving the middle class to bear the heaviest fiscal burden. This concentration of power allows the wealthy to influence policy, further rigging the system in their favor against the majority. When economic power becomes political power, democracy suffers, and the voice of the common citizen is drowned out by money. Gated communities and private security are becoming the norm, as the wealthy physically separate themselves from the consequences of inequality. History teaches us that such levels of disparity are unsustainable and often lead to revolutionary events or major systemic collapses. Addressing this gap is not just a moral imperative, but a necessity for maintaining peace and economic continuity in the future. While inequality divides us by class, our next challenge affects us all through the inevitable passage of time and demographics. The third storm is the demographic crisis of an aging population, a silent time bomb ticking in major economies worldwide. By the year 2030, 1 in 6 people globally will be over 60, reshaping the structure of our societies. Countries like Japan and
I
South
need that
Korea
chart for the
are at the
patient in bed
forefront,
7.
facing
No,
a
we don't
future with
have bed
fewer workers
availability
to
in South
support a
Florida.
growing elderly class. This shift places an immense crushing pressure on healthcare systems and pension funds that were designed for a younger, growing population. The shrinking workforce means that the burden of taxation falls on fewer shoulders, potentially stifling innovation and economic growth. Labour shortages are becoming chronic, driving up the cost of services and making it difficult for businesses to expand operations. The care economy will need to explode in size, diverting resources from other sectors just to maintain the quality of life. Governments will face impossible choices between funding defense, infrastructure, or paying the promised benefits to their retired citizens. We are seeing schools closing down due to lack of students, while waiting lists for senior care facilities grow longer daily. Even China, the factory of the world, is aging rapidly, which implies that the era of cheap global labor is ending. Technology and robotics must advance quickly to fill the labor gap, but they cannot replace the human touch in care. Retirement ages are being pushed back, forcing people to work well into their 70s just to make ends meet financially. The math of pension systems is breaking down, and future generations may not receive the benefits they are currently paying for. This intergenerational tension creates a unique economic environment where growth is slow and the burden on the youth is heavy. Economic growth naturally slows down in aging societies, leading to a world of stagnation unless productivity increases dramatically and immediately. Whole regions are becoming ghost towns as young people migrate to cities, leaving the countryside to wither and decay slowly. As growth slows, countries have borrowed heavily to keep going, leading us to the fourth and perhaps most volatile storm. The fourth issue is the mountain of public and private debt, which has now reached levels never before seen in history. Global debt has surpassed $300 trillion, which is more than 3 times the size of the entire global economy. We are living on borrowed time and borrowed money, creating a fragile system where a single shock can cause collapse. We have already seen countries like Sri Lanka default, leading to chaos, and dozens of other nations are on the brink. The era of near-zero interest rates is over, meaning the cost of servicing this massive debt has suddenly skyrocketed everywhere. Governments must now spend more tax revenue just to pay interest to bondholders, leaving less money for schools and infrastructure. Corporate debt is also a ticking bomb as zombie companies that survived on cheap loans now face bankruptcy and closure. For households, rising rates mean higher mortgage payments and credit card bills, pushing many into a spiral of personal insolvency. A strong US dollar exports inflation to other countries and makes their dollar-denominated debts much harder to pay back. Bond markets, usually the safe haven of finance, have become volatile, signaling that investors are losing faith in fiscal discipline. The fear is a contagion effect, where a default in one sector or country triggers a chain reaction across the globe. International organizations are sounding the alarm, urging nations to restructure debt before it becomes a disorderly and catastrophic collapse. Trust in financial institutions is fragile, and the shadow of debt makes the entire banking system vulnerable to sudden panic. Liquidity is drying up, making it harder to get loans for cars, homes, or business expansion, slowing down the economy. The relationship between debtors and creditors is becoming hostile, leading to legal battles and frozen assets around the world. This financial fragility is made worse by our final storm, which tears at the very fabric of global cooperation. The fifth and final storm is geopolitical fragmentation, where the world is splitting into opposing blocks with conflicting interests. The era of globalization is retreating, replaced by protectionism, sanctions, and trade wars that disrupt the flow of commerce. Supply chains are being weaponized, forcing companies to move factories not for efficiency, but for political safety and security. The war for technology dominance, especially in semiconductors, is creating a digital iron curtain that separates East from West. Economists estimate that this fragmentation could cost the world up to 7% of global GDP, a massive loss. For the average consumer, this means higher prices for imported goods, from electronics to clothing, as trade barriers rise. International cooperation on critical issues like climate change and pandemic regulation is breaking down due to this deep mistrust. Energy security has become a priority over energy transition, as nations scramble to secure resources from friendly allies only. Businesses face a nightmare of compliance, having to navigate conflicting laws and sanctions from different superpowers simultaneously. This fragmentation increases the risk of actual military conflict, which would be the ultimate disruptor to the global economy. We are seeing the early stages of a challenge to the dollar's dominance, as rival blocs seek financial independence. The free movement of people and ideas is being restricted, making the world feel smaller, more closed, and more dangerous. Scientific progress slows down when knowledge is not shared, impeding our ability to solve global problems like disease. We are moving from a world of connection to a world of division, and the economic price will be paid by everyone. These 5 storms: inflation, inequality, demographics, debt, and fragmentation are not isolated events. They feed into and amplify each other. The outlook may seem grim, but understanding these macro trends is your best defense and your greatest advantage. History shows that humanity is resilient, and crises often accelerate innovation and force necessary changes in our systems. You must diversify your income reduce unnecessary debts,
They
and
look
stay educated on
delicious.
these global shifts to protect your family. Building strong local communities and networks becomes crucial when the global systems we rely on become shaky and unreliable. Investing in your own skills and adaptability is the only asset that cannot be inflated away or taxed into oblivion. Consider holding real assets that have intrinsic value, as paper currencies continue to lose their purchasing power every year. Macro Money Talk is here to be your lighthouse, guiding you through these turbulent economic waters with clarity and truth. If you found value in this deep dive, please subscribe and turn on notifications to never miss our future updates. Share this video with friends and family who need to wake up to the reality of the global economy. Which of these 5 storms concerns you the most? Leave a comment below, as we want to hear your perspective. The world is changing, but with the right knowledge and preparation, you can navigate the chaos and find opportunity. Thank you for watching Macro Money Talk. Stay safe, stay educated, and we will see you in the next video.